Welcome back to the Investor's Library. We're always on the lookout for books that can give us an edge in the markets.
Absolutely.
And this time, we're diving into The Big Short by Michael Lewis.
Oh, classic.
It's a wild ride through the 2008 financial crisis. And you know what? There are some seriously valuable lessons in here that we can apply to investing today.
Oh, absolutely. I mean, The Big Short is fascinating because it's not just about finance.
Right.
It goes deeper. It's about human psychology, market dynamics, and, the dangers of just blindly following in the crowd.
Exactly. Lewis takes us back to the mid-2000s.
Okay.
Remember that housing boom? Everyone thought real estate prices could only go up.
Yeah, seemed like it.
But Lewis reveals this huge storm brewing beneath the surface.
Right.
And it all started with these things called subprime mortgages.
Yeah.
Basically loans given to people with not so great credit.
Not so great credit. And not just that.
Yeah.
The loans themselves were packaged with incredibly risky terms.
Oh,
Interest-only payments, even loans where the principal actually increased over time.
it's crazy.
Yeah, imagine that. Your mortgage is getting bigger, not smaller.
It's mind-blowing, right?
Well, yeah.
It was like they were handing out matches in a fireworks factory.
Exactly.
And then Wall Street comes in, takes these risky loans, bundles them up into these complicated securities called mortgage bonds, CDOs.
Right?
And then they slap a AAA rating on them like it's a five-star hotel.
Yeah, and everyone just bought it.
I know.
From big banks to individual investors, everyone's like, oh, AAA must be safe.
Right.
But there are a few people who
Yeah.
saw through the smoke and mirrors.
Exactly. Lewis introduces us to some real characters like Steve Eisman.
Okay.
He was a Wall Street analyst,
Right.
but not your typical suit and tie type.
No.
This guy was cynical, skeptical,
Yeah.
and he started noticing some shady accounting practices going on with these subprime lenders.
Yeah, he was seeing the cracks in the foundation early on.
Yeah. And then there's Mike Burry,
Oh, Mike Burry, what a character.
this quirky, medal-loving former doctor who starts managing a hedge fund.
Yeah.
And this guy's digging through these massive mortgage bond prospectuses.
Right.
Basically teaching himself how to decode these financial instruments.
It's amazing he had the foresight to even look there.
Can you imagine?
Yeah.
It's like a financial detective
Absolutely.
piecing together clues that everyone else was missing.
Yeah, he was connecting the dots that no one else even saw.
And he realizes these loans are structured to implode.
Yeah, it's almost like they were designed to fail from the start.
Right. And then we have Greg Lippman, a trader at Deutsche Bank,
Okay.
who figures out he can actually bet against the housing market using these things called credit default swaps.
Oh, yeah, that's a bold move.
It's like taking out insurance on a house you think is going to burn down.
Exactly.
Talk about going against the grain.
Yeah.
These guys were like salmon swimming upstream, fighting against the entire Wall Street
Oh,
machine.
the whole system. Yeah.
Yeah,
It's incredible they had the courage to do that. I mean, it wasn't easy for them.
of course not.
They faced skepticism, resistance, even ridicule
Oh, yeah.
from their peers and colleagues.
Absolutely.
I mean, they were betting against the biggest boom in decades.
Right. Talk about a pressure cooker.
Yeah.
Can you imagine having that conviction
It's
to
tough.
stick to your guns when everyone else thinks you're crazy?
Exactly. But they did. And as we know, the housing bubble eventually burst.
It did.
It all started to unravel in 2006. And by 2008, it was a full-blown meltdown.
Oh, yeah.
Bear Stearns collapsed. Lehman Brothers went bankrupt.
The whole 9 yards.
The whole financial system teetering on the brink.
And these guys were the ones who saw it coming.
Right.
They made a fortune.
They did well.
But even with their success,
Mm-hmm.
they remained outsiders.
Yeah.
Makes you think about the cost of going against the grain, even when you're proven right.
It does. It's a powerful reminder that sometimes the smartest people in the room are the ones who are willing to challenge the status quo,
Yeah.
to ask the uncomfortable questions, and to be okay with being different.
Okay, so let's bring this back to today.
All right.
What can we as investors learn from The Big Short?
Well, I think the biggest takeaway is critical thinking.
Okay.
Don't just blindly follow the crowd or trust the so-called experts.
Okay.
Do your own research.
Yeah.
Dig into the fundamentals. Be skeptical of anything that seems too good to be true.
Right, like that old saying,
Yeah.
if something sounds too good to be true,
Exactly.
it probably is.
And another key lesson is to understand incentives.
Okay.
Who's making money from a particular investment? And how
Right.
are their interests aligned with yours?
That's something that really stood out to me in the book.
Yeah.
The way these Wall Street firms were packaging and selling these toxic mortgages.
Right.
They were making a killing, but it was at the expense of everyone else.
Exactly. So it's crucial to be aware of the potential for conflicts of interest.
Yeah.
Ask yourself, who's getting rich here and who's taking on the risk?
The Big Short also highlights the importance of understanding the underlying assets. Don't just rely on ratings or marketing materials.
Right.
Dig deeper, ask tough questions, and be prepared to walk away if something doesn't smell right.
Think about those investors who saw through the subprime mortgage mess.
Yeah.
They didn't just take things at face value.
Right.
They dug into the details,
Right.
analyzed the loans, realized that the whole system was built on a foundation of sand.
And they weren't afraid to bet against the crowd.
Nope.
Even when it seemed like everyone else was making money hand over fist.
Yeah, it takes guts to be a contrarian.
It does.
But sometimes that's where the biggest opportunities lie.
Absolutely. And one more thing I'd add is to be aware of the psychological factors.
Yes.
They can drive market bubbles.
Oh, yeah.
Fear, greed, complacency, herd mentality.
All of it?
These are all powerful forces that could lead to irrational decision-making.
Absolutely. The Big Short does a great job of illustrating how these forces played out in the lead up to the financial crisis.
It does.
It's like a case study in market psychology.
Exactly. So as investors, we need to be aware of these biases
For sure.
and develop strategies to mitigate their impact on our decisions.
Absolutely.
So how can we apply these insights to today's market?
Well,
Are there any areas where you see potential red flags where things might be getting a little too frothy?
I think it's important to be cautious in any market where prices have been rising rapidly, where there's a lot of hype and speculation.
That makes sense. We've seen some pretty incredible run-ups in certain asset classes lately.
We have.
Are there any specific examples you have in mind?
Well, I don't want to give specific investment advice, but
That's it.
let's just say there are certain areas of the tech sector
Okay.
and even the real estate market in some regions where valuations seem to be getting ahead of fundamentals.
So it's important to be discerning to do your homework
Yeah,
and to be prepared to walk away if the risk-reward equation doesn't make sense.
exactly. Don't let FOMO, fear of missing out, drive your investment decisions.
Right.
Remember, the best investors are patient, disciplined, and they're not afraid to go against the grain.
One thing that struck me about the investors profiled in The Big Short
Yeah,
is that they were all incredibly curious.
yeah.
They weren't afraid to ask questions, to challenge assumptions, and to really dig into the details.
Such a great point. Curiosity is such an important trait for any investor.
I think so.
It's what drives us to learn to explore and to uncover hidden opportunities.
And it's what can help us avoid getting caught up in the next big market bubble.
Exactly. So stay curious, my friend. Stay skeptical. And never stop learning. It's so important. We can't just assume that markets will always go up.
Right.
Or that someone else is looking out for our best interests. We have to take ownership of our financial decisions.
Exactly. The Big Short shows us that markets can be these incredible engines of wealth creation,
They can.
but they can also be vulnerable to excess and irrationality.
Yeah. And understanding history,
Yeah.
learning from the mistakes of the past.
Yeah.
That's essential for navigating today's financial world.
As we were talking, I kept thinking about that question that Lewis leaves us with at the end of the book.
Oh, yeah.
If these unconventional investors could see the housing bubble forming, are there similar opportunities hidden in plain sight today? What do you think? Are we missing the forest for the trees?
It's a question worth pondering.
It is.
Are there blind spots that we have today? Things that seem obvious in hindsight, but we're overlooking right now.
It's a little unsettling, to be honest.
It is a bit.
But I think The Big Short gives us the tools
Yeah.
and the mindset to start looking for those opportunities, or at least to avoid getting caught up in the next big mess.
Absolutely. It encourages us to stay curious, to always question assumptions, and to be willing to challenge conventional wisdom.
Well, I think we've covered a lot of ground today.
We have.
This has been a fantastic deep dive into The Big Short. It's a book that really makes you think,
Does.
and it's one that I know I'll be coming back to again and again.
I agree. It's a must-read for anyone who wants to understand how markets really work and how to avoid making the same mistakes that led to the 2008 financial crisis.
So to our listeners out there, if you haven't already, I highly recommend adding The Big Short to your reading list. And in the meantime, remember to stay curious, stay skeptical, and as always, happy investing. Thanks for joining us in the Investor's Library.